Mayuresh, your take on pharma stocks now, they all seem to be, or many of them seem to be bottoming.
Afternoon, Lata. Yes, I think with the news of Divi's, the enthusiasm in terms of resolution of timelines for affected plants for pharma companies seems to be a very plausible kind of an effect scenario over the next few quarters. Having said that, I think the kind of earnings downgrades specifically with relation to pricing pressures, competition intensity for drugs, as well as the high R&D expenses were already built into the balance sheets. So the take here is again that the next few quarters might still be a little bit lumpy, as most managements have indicated. But if these timelines probably come faster in terms of resolutions for their plants, the 19 and 20 numbers will look far better for these pharma companies, assuming the kind of spends that they're doing in creating these niche complex generic drugs. So yes, I think Aurobindo also has been a favorite of mine for a period of time. But again, from a bottom-up top-tier approach, my own sense is that Lupin looks very, very interesting. The next 2-3 quarters might be a little bit soft and lumpy, as the management has indicated. But the kind of pipeline that they've got in terms of key drugs and the pricing pressures that the company has witnessed in a lot of their drugs, I think that should slowly and steadily start getting alleviated, and the earnings should probably start rebounding much faster. So yes, I think if one's got a 1.5 year kind of a view, Lupin from the top tier names is something that I'll continue to prefer.
Mayuresh, in the results season, is there anything that was a standout performer for you?
No, so that Hexaware, I think yesterday came out with a very good set of numbers. And again, the expectations here is that these niche mid-cap IT companies, if they're able to deliver going forward, leaving aside the currency appreciation part, which will affect the entire industry as a whole, I think the earnings trajectory there can be quite good. Out of the abrasive space, Carborundum Universal, in my opinion, came out with a very good set of numbers. And looking at the unorganized pie that market actually has, significant gains can actually be made into these stocks going forward as well. Very few listed players who actually are there in the ceramics and the abrasive industry as a whole. Shriram Transport, again, I think good set of numbers, purely going by numbers, and with the assumption of a 15% AUM growth. Similarly was the story for Chola Investments, where the trajectory came in much higher in terms of a 36% profit growth. The assets under management over 37,500 odd crores, and the management very, very hopeful in probably keeping the asset quality under check. So I think few of these stocks I think have delivered quite good performances in the quarter gone by.
All right, Mayuresh. Many thanks for being with us this afternoon. Good talking.
Mayuresh, your thoughts?
Lata, I remain very positive on this bank for two reasons. If you put out a grid in terms of the GNPAs, NPAs and a capital adequacy and lay down all the PSU banks within its peers or even the large cap names, this is one bank which stands out on all parameters. So GNPAs, NPAs are quite lower than most other PSU banks. The capital adequacy remains extremely strong. And if you look at the management commentary also, they're very, very hopeful of getting that GNP ratio around 5% over the next few quarters, which basically means that if credit growth resumes back in the system and the entire recapitalization works in favor of PSU banks, the kind of return ratios that these banks can exhibit going forward can be quite exponential. So my own sense is that if the investor has a time horizon which is not mentioned of a year, year and a half, he should hold.
Mayuresh, the fundamental view on Ambuja?
So Lata, I think numbers are very encouraging, not just for Ambuja, but even ACC and the other cement players. So again, I think as a cyclical story over the next year and a half, 2 years with government reforms, housing, irrigation, infrastructure, I think a lot more will probably start getting into as utilization levels start picking up. Again, as demand starts catching up and the entire scenario of lesser players probably adding capacities at this point of time, that will definitely add to the ROEs and ROCs of these players. So yes, I think if it's a 6-month or 9-month view, you can definitely hold on. But the other picks that I probably still like within the cement space is Ramco Cements and JK Cements. With the expansion for Ramco Cements in the east, they're adding grinding capacities. The cash flows will be far better over the next few years. The EBITDA per ton obviously will improve. And JK Cement also has the element of white cement. So I think white cement realizations are much better, and one of the very few players in the country actually to do that. So yes, I think numbers can be very, very encouraging if one actually holds on with the view of 1.5 years. So definite, if a 6-month view, hold on to Ambuja Cement much longer. I think any decline on stocks like Ramco, JK Cement, I think they, in my opinion, become good buying opportunities for long-term investors.
All right. Thank you very much, Mayuresh, for that. And we go to the stock of the day quite clearly. Divi's Labs. I was expecting a bunch of questions on that. We've picked up one of them, and I guess others will be listening in. Bhashi has tweeted this question, and he wants to know the outlook, obviously, for Divi's Labs from a 6-month perspective. Wants to know if he should hold or sell. Oh, he's bought the shares reasonably cheap. He has bought it at 932 rupees, I suspect early morning today, or maybe late yesterday. Your thoughts, Mayuresh, first?
So it's a 6 months we can definitely hold on. I think what has transpired is very, very positive for Divi's Labs. And again, if you look at the earnings perspective, a lot of analysts on the streets were pegging an EPS of close to around 38, 39 odd rupees for FY19. With the ban actually coming off and expected that should incrementally add to earnings over the next few quarters, the EPS estimates can actually go up. So I think even if you assume an EPS of around 43, 44 odd rupees, it is still something that has a potential upside left onto the stock. Secondly, again, I think the numbers were a little bit lumpy this time round, but largely, again, I think as normalization starts happening onto their balance sheet, and even if one assumes the component of capex for commissioning of one more facility that they're probably embarking upon, I think it still has some steam left. So I think if it's a 6 month, it's a clear hold.
Okay, so that is Divi's. I mean, 6 months actually. The month of May, the price was 600 rupees. It's basically doubled in the last 6 months or so. Absolutely stunning move. Twitter user Sam Thomas has 1,000 shares of NTPC, which he purchased at 160 rupees a share. He wants to know if he should hold or sell. 1,000 shares of NTPC at 160. Mayuresh, what would you tell Sam about NTPC?
So Prashant, I think this is one story which gives you these compounded returns of 8 to 10% on an annualized basis. So if the investor is very, very happy with those kind of returns, I think he can very well hold on to the stock. The unfortunate incident that happened at one of its plants, I think it's really unfortunate, but at this point of time, I think if you look at the kind of capacity expansions or the capex that the company is going through and the kind of earnings that one really expects to come out of the next few quarters, I think this is one stable return giver. So I think if he's very happy with the 8-10% compounded return, he can very well hold on. Otherwise, as I mentioned, I think there are a few stocks out of that mid-cap universe which can do well. My opinion again stands with something like Carborundum Universal, where numbers were very, very strong. A few of the mid-cap IT companies, Cyient again posted a reasonable set of numbers in my opinion. And again, with expectations of services business expected to grow in excess of 20-odd%, the DFL-led business expected to grow in double digits, margins expected to be between 13 and 14-odd%. I think this is also one story that can be actually be looked at on declines in a staggered way.
Okay, Mayuresh, your thoughts, Ashok Leyland?
So clearly, Lata, I think market leadership position in excess of 30-odd% in the MHCV part of the business. Even on the LCV front, it's basically trying to get inroads in terms of volume growth, which probably has been lagging the overall volumes for Ashok Leyland. The technology that is used, I think, is far better. The IEGR technology far better than the existing technology at place. And again, I think with the kind of discounting that one really has got used to, I think the discounting factor on the MHCV part of the business should steadily start coming down over the next few quarters. Having said that, I think the kind of margins that Ashok Leyland has reported, there should be some amount of stability in margins going forward as well. And as volumes return back, specifically with the LCV contribution, the leverage on the balance sheet can be very, very evident. So yes, I think if it's a 1.5 year view, the hold rating still continues.
Welcome back. You're with us here on Markets Today Talk Back. Mitesh Thakkar and Mayuresh Joshi are answering all your stock-related questions. Today, of course, we had a bit of a sideways kind of day. So the questions are continuing. Twitter user Monil Parekh wants to know if he should buy GVK Power at current levels. It's a specific question. He wants to know if he should buy GVK Power. And he wants to put in 90,000 rupees for the next 2 years. I think GVK is around 16, 17 rupees or so today. Good idea, Mayuresh. Bad idea. What would you tell Monil?
So again, I think one really has to be selective within this space. So Power Grid's numbers are just flashing on the screen as I see it. And our own sense is that the kind of regulated equity that Power Grid is posting, it will be a complete story if one really has a 2 to 3 year view. The ROEs are very well defined at 17.5%. The telecom and consulting business EBITs are well. But that part of the element is the execution and the capitalization that remains strong. So if the management is able to do that post shows the results today. I think it really is a good story. And an alternate from the mid-cap, again, electric, something that I've bid business probably is one of the weak for businesses, but the PLF there has improved drastically year on year. And if this business probably is sold off completely over the next 2 to 3 years as the management award is ending, I think it adds substantially onto the cash, where the EPC business is so strong for the company. Free cash flow yields in excess of 4.5%, a very decent order book, and margins in excess of 15-16% with a dividend yield of 1.5%. So something like that on declines can also be a very good bet with a 2 to 3 year perspective.
Okay. Well, that's on IDFC Bank. It's only a 1 or a 6 month view, but a very quick view, Mayuresh, on the bank.
It's a stable performer, and it's going to take time to build up its franchise. And largely, again, I think if you look at the kind of book that it is built, I think very difficult to fathom a case of a very strong earnings growth, both on the NII front as well as on the bottom line. So largely, again, I think the newer private sector banks is something where the momentum can still be very, very strong. So my opinion is RBL Bank, with the kind of base that it has and the kind of expectations of advances growth, can be quite stellar, at least for the next 1 year. Post that, whether capital raising is required or not is a different issue, but for the next 1 year, I think that growth can be quite stupendous. So this new generation bank, something like RBL Bank, if somebody has a view like 6 months, I think the returns can be quite stellar if they are able to perform the way they have been in the past.
Fair point. Mayuresh and Mitesh, thank you very much for joining us and answering questions of our viewers.